Hi, let's have a look again at Polkadot, ticker symbol DOT, currently at $24.81. A market dominance of 1.2%, market rank number 9, it's one of the top 10 crypto coins, and thus the market cap is more than 24 billion. Polkadot is basically the next best thing to Cardano. And so once you go down this cryptocurrency list, you go down in market cap and you feel that the Cardano train has already left because the overall market cap is already at 82 billion. Cardano has risen quite a lot recently because of the smart contract functionality that's going to be launched soon. If you're wondering what could be next, Polkadot could be your bet. And so let's look at Polkadot. Let's not just look at the US dollar chart, but let's look at Polkadot valued in Bitcoin, valued in Ethereum, and of course also valued in Cardano. So this is now the Polkadot price divided by the Cardano price to get relative performance. And so let's see if it makes sense to buy Polkadot right now. Since the middle of August last year, Polkadot has risen by approximately 8x, so a performance of 700% within 1 year. And that's not too bad, right? Making 700% gain. But if you compare this to Bitcoin, the story doesn't look as impressive anymore. We are looking at 100% outperformance. So still we outperformed. That's good because we do take on more risk, but the outperformance is not very consistent, right? We could imagine having trading ranges over here, and we're basically in the middle of that trading range, but there's no real clear trend over here where we get consistent alpha, where we consistently outperform. Now, what I usually tend to do is not really looking at the Bitcoin valuation for any altcoin, because Bitcoin and Ethereum are pretty different. Bitcoin is held for the very long term. It's held as a portfolio diversifier because the correlation between Bitcoin and stocks is pretty low. So if you have traditional investments, stocks, portfolio, and then you add crypto to it, then what you usually do is you simply buy Bitcoin. So here, look at this. This is the 2-year rolling correlation coefficient between Bitcoin and the S&P 500. We see that it tends to increase. So the correlation of daily returns tends to increase, but it's still very low, right? Perfectly correlated would be 1. Perfectly negatively correlated would be -1. We want, whenever we construct a portfolio, to have low correlation because then the price fluctuations, they cancel each other out. So the lower the value here on this graph, the better the asset to be combined in a portfolio. And it's still relatively low. So a lot of people, especially in the institutional space, they approach investing in that way. They're looking at correlations, they're looking at reducing overall volatility of the portfolio, maximizing the Sharpe ratio. And Bitcoin works really well for this because it has established itself, right? And so these are the kind of Bitcoin investors that now move the market. Retail doesn't buy Bitcoin that much anymore because the potential isn't that big. Retail shifted from Bitcoin to altcoins since the beginning of the year. We can actually see this in Bitcoin dominance. If you look at this, the Bitcoin dominance was relatively high until the beginning of the year. So there was a massive rally happening in Bitcoin, right? This 10x rally from 3K to 30K. In 2019, 2020, Bitcoin dominance stayed high, but since the beginning of the year, the dominance is rapidly falling, right? 70% of all of crypto was Bitcoin at the beginning of the year. Then it fell down to 40%. Now we are at 44%. And so this massive shift, this increase of altcoin valuation is due to retail going up the risk curve, buying altcoins. That's probably also the reason why you're watching this video, right? You want to outperform Bitcoin. You want to make more money than Bitcoin, and that's why you're looking at Polkadot. And so since those investors are very different, retail that goes into altcoins, institutions that go into Bitcoin, I think this is not an apples to apples comparison to look at Polkadot in Bitcoin. It makes more sense to look at Polkadot in Ethereum because Ethereum and altcoins, they're much more closely related. And so if you also look at the daily return correlations between Ethereum and some random altcoins here and Bitcoin and those altcoins, we see that the correlation coefficient of Ethereum to the altcoins tend to be higher. So the nature of those assets and the correlation of those assets, they are higher. And so always look at your altcoin in Ethereum. You are looking for outperformance versus Ethereum. Ethereum is the quote-unquote safe bet, and you go up the risk curve, you go down on the market cap to make more than Ethereum. So look at how much you outperform versus Ethereum. So that was a long story just to explain why I tend to look at the Ethereum chart. But let's look at this. Since the altcoin rally, it started since the beginning of the year. Polkadot did not outperform versus Ethereum. We lost 37%. That's not too positive, but we might also argue that we have more or less maybe reached a bottom over here. So the question really is, do you think that Polkadot will continue to underperform, will continue to lose, or are you rather considering this as a good risk versus reward opportunity, right? You've got risk of, say, losing 20% if you set a stop loss over here, and a potential gain of an outperformance versus Ethereum of 200%. I tend to go with the latter, and that's simply because Polkadot is already very large, right? It's in the top 10. It's not a completely exotic project in like place 200 where nobody knows what's going on. This project has visibility, but it's simply relatively low right now. If you know the fundamental reasons why we lost against Ethereum here so massively, please let us know in the comments below, because I would be really interested of why this happened. If this is just general mood swings of the market and kind of like attention shifting from one asset to another, and this is now Cardano outperforming because of the smart contract launch, then this might be a good opportunity. If this, however, is driven by some really serious issues with the project. For example, Chainlink has the issue that the core developer team is selling quite a lot of their coins, and so Chainlink underperforms Ethereum as well, but that's really a strong fundamental reason why it's underperforming, right? It's unlikely to quickly change. But if there's no strong fundamental reason why since March we saw an underperformance of like 66% here, then this might be a good buying opportunity. Not over the next days maybe, but probably over the next month. Now we all know that Cardano is going up recently quite a lot, right? We almost hit the $3 mark. We didn't quite hit it yet. We had our trading range for quite a while, and now we are pretty high because of the smart contract launch. Now, if we divide the Polkadot price by the Cardano price, since Cardano has outperformed Ethereum, this chart is no surprise, an underperformance of 56%. And if we look at the performance since the beginning of the year, again, where the altcoin rally started, we are looking at an underperformance of more than 80%. So this is pretty massive, right? If you invested at the beginning of the year in Cardano instead of in Polkadot, you would have now 5 times more money. This is a massive underperformance. But again, it's very hard to say if this will actually continue, if Polkadot will become a number 20, a number 30, a number 50 market rank coin, or if this is just a temporary shakeout. Fundamental research here is needed. Regarding any altcoin trading, I always look at how Ethereum is doing, because I think Ethereum in the end leads the altcoin market. It is highly correlated. And so if you're interested in US dollar gains and not just in outperformance, in the very end, you need to consider how is Ethereum doing? Is it likely to rise or is it likely to fall? And what I've done in order to find that out is I've done a backtesting analysis of moving averages, of a moving average trading strategy. We find out that the 23-day moving average and the 39-day moving average tends to work the best. So if you bought and held Ethereum, you would have gotten only 56%. If you trade according to the 23 or the 39-day moving average, you would have gotten way more, around 150% per annum. And this is how that looks like. So in white, we see the Ethereum price. In purple, we see the moving average, and this is now the 23-day moving average. And so whenever the price is below the moving average, we go completely in cash. So in gray is the portfolio line. Whenever the price is above the moving average, we go into the market, we invest into Ethereum. And so this way you can find out what moving average works best to predict the general market sentiment, to find out what gives you the best signals, the 23-day moving average, and here the 39-day moving average. I'm toggling between those now. They have the best returns. And so when you look at any of those trading strategies with moving averages, they tend to outperform just buying and holding, except the 2-day and the 3-day moving average. They all tend to outperform. And so when we now look at Ethereum, we should plot those two moving averages. Here they are, the 23-day moving average in light blue, the 39-day moving average in dark blue. And we are pretty much at a crossroads now, right? We have already crossed the 23-day moving average, which is not good. So this would now be a selling signal. But I tend to stay in the market because those two moving averages, they more or less have the same performance if you backtest. And if you just compare this crossover here with the cross that happened in May, the nature of those are very different, right? We had this incredible run up and then we shot down and we broke this moving average really quickly by going down like 20% within like 2-3 days. And that's obviously a very bad sign. And then we rushed through and in the end, from top to bottom, we went down by 57%. Now this break over here looks much more innocent, right? This is like a sideways consolidation here. We are in a trading range and we're just crossing this moving average while we are trading sideways. So I think this cross here is less dangerous. If we now suddenly drop down, say by like 7 or 8%, or maybe even just by like 5 or 6%, then I would change my mind. Then I would probably get out of the market. And that would not be true for Bitcoin, right? I hold Bitcoin over many months, over many years. But for Ethereum and especially for altcoins, I don't want to be in them when we are in a bear market because altcoins, they can lose 90 or even 95%. Cardano has done this in the past. And so it does make sense to have an exit strategy if momentum cools down. And that's my personal strategy. I look at those two moving averages and when they are crossed, I am less bullish and so I sell. If you want to know when those moving averages get crossed and when I personally sell, feel free to join our Telegram channel, the Bitcoin Strategy channel. We are currently around 400 people over there. It's completely spam free. You can find us by either searching Bitcoin Strategy channel within the Telegram app, or you can also click the link in the video description. It leads you straight to our channel. If you haven't yet, feel free to subscribe as well. I publish videos every day. And since the videos, they are time sensitive, you might as well hit the notifications. It makes sense to watch those videos while they are fresh. Last but not least, if you haven't yet, feel free to like as well. It will help the channel grow. Thank you very much. See you next time. Bye-bye.